Hi everyone, it's Mariella from Binary Option Sheriff, and today is Sunday, a little bit late where I am, but I thought that it is appropriate to find time, and instead of reviewing an auto trader today, we are going to discuss actual trading. And for many of you who are beginners and who do not know anything about trading, we are going to use one tool which is absolutely important, and it is a fantastic tool that can help you make a little bit more correct decisions when you are trading either forex or binary options trading. Both actually are based on the same principle. So what we're looking at here is a chart from historical data, because this is referring to trading on April 9th, which is basically the end of day of Friday. And here we are looking at a 5-minute chart referring to the euro and US dollar currency pairs. We are going to use the Fibonacci tool. And it might sound heavy and complicated, but basically Leonardo Fibonacci was this mathematical genius who came up with a formula that is actually quite simple. For you to understand, it's as simple as that. 0 plus 1 is 1. 1 plus 1 is 2. 2 plus 1 is 3. 3 plus 2 is 5. 5 plus 3 is 8. And you keep on building up. He came up with this mathematical formula, which is unbelievably simple, but which seems to have a way of always hitting the right place with the way price moves. Now, there is one important thing to bear in mind. This tool should be used only when you have a trending market. And what is a trending market? A trending market is specifically what we are looking at, where we have this is a 5-minute chart, and whoever has never looked at a chart before, I will explain very simply what it is. I'm going to try to explain this in the most simple and possible ways so that anyone who is even new to trading will understand it. So this is a chart which shows us how the price between the euro and US dollar moved between 135 and 455. So we're looking here at a couple of hours, not huge hours, and each candlestick is showing us what happened in every 5 minutes between 135 and 455. So each bar here is signifying 5 minutes. So this is where you can select the time frame of the charts you want to see. So if we don't want to look at 5 minutes, we can be going for more options, and we can be looking at 10 minutes. The chart will be looking a little bit different than it did before. However, the principles remain the same. So here we have a 10-minute chart where we are going even a little bit further back in time, and this is going back as far as 10 o'clock on April the 8th, and finishing at the same time. So if we look here, we had an uptrend all the way for an hour. Probably there was some news which was impacting the currency pair, but after that we had a trending market, and this is where it is the best time to use the tool that I am going to show you how to use. A trending market, as it is in this case, is between April the 8th at 11:30 at night all the way to 4:50 in April the 9th. A trending market, as we have here, is in this case showing a downtrend. So we have a price that started at 1.14183 here and worked itself all the way down to 1.1389. So the trend here is clearly a downtrend, and this is the best place for us to use the Fibonacci tool. So I'm going back to the 5-minute trade, because I like to use the 5-minute chart for binary options, because when you are using a 5-minute chart, it is going to give you a time allowance to look at a 15 to a maximum 30-minute trade. It will show us the indication of how we should be taking the high or low decision, or the put and the call, because brokers call it different ways. But we are going to see how we are going to be able to use this Fibonacci tool. I am on the Net Dania station for trading, and I really like this charting station because it's quite simple to operate. And what I'm going to do is I'm going to have a look at the huge list of tools that you can use, but I am only going to be selecting the Fibonacci. So here we go, we find the Fibonacci Retracement tool, and here we are. So this is the Fibonacci Retracement tool, which is going to help us decide between how we are going to make our decisions for the future, for the future calls that we are going to take. If we look here, we know that from here all the way down here, we've had a downtrend. But actually, this is totally confirmed either at this spot or even at this spot. In order to use the tool effectively, we have to find two important things. We have to find the swing high or the swing low. So in this case, we are going to find the swing low because we are on a downtrend. This is the highest point where we had our swing high. And in order to establish a swing high, you have to have at least two lower highs. So here, in this case, we have the capped lower high here and another capped lower high here, and this is the point we're in. So we can safely use the tool here because we have already the confirmed uptrend, which then reversed into the downtrend. At the other point, we have the low trend here, and this is going to be established by finding two previous candlesticks with higher lows, which are these two over here. And this is where we are going to set the target of our tool. So we go back, we find our Fibonacci retracement with the high and low. As you can see, I can move this around. This is our highest, whereas this is our lowest. You can see the pen here, and this is where we are going to place our tool. So we've placed our tool, as you can see, at the highest point here and the lowest point here. And automatically it has given us these retracement lines. Okay, what do we have here? This is absolutely fascinating to look at, because basically what this is telling us is that once we start having a reversal, which is indicated clearly with the next bar here, the blue bar shows us that the price is going back up. It places a line at this point, which means that it is expected that the price will go as far high as this point here. If the price breaks through this level, which becomes the support level, it means it will have a new support level, and the new support level is going all the way up to this point. Look at where all the bars end. You have 1, 2, 3, 4, and the fifth bar, all moving and stopping in the same direction. So what became the resistance level here became also the new support level. The price was resisted at this point, but once it broke through, it then became the new support price. Again, we have another bar here which went completely out of every support and resistance level, but we see a retracement back and the price is again establishing and hovering around this line here. How can we apply this in reality with our trading? Because this is the most important thing. I prepared the chart with a screenshot here, and together we can have a look at these price retractions and how we can actually use them for our trading. So, at what point do you put the Fibonacci tool into action? We have established that we have a trending market which is going as a downtrend. We can apply the same thing when it's an uptrend, but in this case we went from high to low. And these are the points now where we are going to act upon them. As soon as we had the lowest out of the three bars and saw the retracements, that is the point that we start applying this Fibonacci tool. Now I am going to draw a few lines and show how we could have acted on this and made some money when we are trading with binary options. So we are on the page here and I am going to draw a few lines. So I am going to annotate a line. So from this point, which is the point that we are working from, because here is where we had the reversal, we know that if we took a trade, even at this point here, we could take a trade as far high up as here. In this case, since we are looking at 5-minute, we are looking at 5-minute bars. So we have 5, 10, 15, 20, 25 minutes. In 25 minutes, so if we take anywhere between a 15-minute and a 30-minute trade, so going for an uptrend, so we take in this case a call because the price is reversing from the downtrend that we had, we would have been completely in the money. This is the point where we watch the price again. So here would have signified our first in the money success trade. The price always pulls back. You can be assured of this, that after you have 4 or 5 candlesticks which are confirming a trade, then you are always going to have what is called a pullback, hence the red candlestick. Once the red candlestick was down, we see that once again the price is going to go all the way up again. I am looking at a historical data in this case. However, the historical data proves to us that this point is also an important point. So we had once again the price go all the way to this point, this has become our support line. But once we had this candlestick break through, our support line became our resistance line. At this point, we could draw another Fibonacci tool because we had 3 candlesticks in a row with the highest, in this case, being the higher of the 3, and we could establish another one at this point below to see where the price is going to go. But as you can clearly see, the line here establishes all the time the support and the resistance, and at any point in time we can see that we are safe to take trades which will be favorable because the lines are indicating the support and the resistance level. I'm not sure whether I was clear enough with this, but I can show you once again on a practical level how to put the tool again, in this case on a downtrend. We used it on a downtrend. Here is where we had the retracement. Remember, we are using this tool as a retracement tool. So I could once again plot the same tool once again from this point all the way down to my lowest low. Here we go. I have replanned this, and this is now once again showing us the slight variation. But if we were all the way down here, we knew that once we had the blue candlestick, the retracement was going to give us the new support and resistance levels, and at any point in time here, we could take the put trades and know that we are going to be safe in making a decision that is going to be favorable for our trades. I hope this was not too complicated, but there are a few things that will definitely help you with your trading. Even if you are a new trader, I'm sure that you have pulled out some information that can help you. Remember, the candlesticks, each and every candlestick is signifying the amount of minutes that you decide on the chart. In this case, it's a 5-minute chart, so every bar shows you 5 minutes of trading. So the trading was up here, and then it was down, then it was back up, and all the way down. Whereas the Fibonacci tool that we have used with the help of the grids that we are given shows us clearly when the retracement is going to happen and how far it is going to happen, and within that parameter of time is when we are able to take our calls. Also, very important, remember that this is a tool to use during a trending market, meaning that there is an established pattern of a downtrend or a high trend. If there is going to be any news that is going to impact the flow of the currency, this tool is not going to be a useful tool. So always check the economic calendar, use this tool, and although, of course, it is not an infallible tool, it is a fairly accurate tool that can definitely help you with your day-to-day trading in Forex and in binary options. Thank you. Subscribe to our channel, and I hope I will be able to give you as much important information about trading as possible to help you make good and enlightened decisions. Cheers.